Good morning, good afternoon, good evening. It's your boy Gary Scott, aka the Solid Pip Assassin, and we're back with another live educational video. All right, guys, on this session, again, I'm going to repeating some of the same things that I've repeated in my previous sessions and in my previous videos, right? But it's always going to be something that you could possibly not caught the first time, but you possibly could catch this time. All right. So, with that being said, get your notebooks out. All right, note takers or money makers. All right, note takers are money makers. So get you a sheet of paper, get you a couple sheets of paper, write down everything that you feel like you need to write down. All right. If you find it important, if with the new age technology, you want to take pictures, by all means, take pictures so that way you can have a something to fall back on. All right. So with that being said, let's get straight to it. All right. I call my method the power of three. All right. I don't like calling anything a strategy. I just simply use the things that the market operates from and I put it together to make it work. All right. So if you guys understand and you guys know this, right? Um, the market operates as the world does. So, and vice versa. So you have levels in the market like order blocks, which are in most cases even called supply and demand zones, right? You have those particular things being created in the market so that way price can find its way back to that particular level, right? Because that is an area of value that you have to pay very close attention to. All right. Order block, which is also supply and demand. When you think about everything, right? When you think about everything in life, and how this world operates, it operates off of supply and it operates off of demand. There is the person that demands something, and then there's a person that supplies it. All right. When you think about a person that demands something, what are they doing? They're buying it. When you think about somebody that's supplying something, they're selling it. All right. So now take a step back and even look at it from a perspective of an uptrend and a downtrend. When you're in an uptrend, right? The only thing that you should be doing, right? The only thing that you should be doing is finding areas to buy from because it's going to create consistent higher highs and higher lows. Is it going to look this pretty at times? No, right? But this is just an example, right? You have price creating higher highs, you have price creating higher lows, higher highs, higher lows, higher highs, higher lows. Now, when price comes back to these higher low standpoints, right in the market, when they come back to these areas, when they come back to these higher low standpoints, after they're done breaking a structural high, right, and it gives you your break of structure, your BOS, right, your break of structure. Once price breaks structure, it's going to create a high for it to retest again back to a area of value. Okay, so when price broke structure and surpassed this high and created this new one, when price retests, right? Here are the three areas of values that price could come back to within an uptrend. All right. You have an order block, which is in most cases supply and demand, right? You have a structural level, right? And then you also have a fair value gap zone. All right. Fair value gap. I'm going to explain what each of these three means. Okay. Now, if you're in an uptrend, right? If you're in an uptrend and price breaks structure to the upside and it decides to retest, let's just say to a order block. A bullish order block is the last down candle before price breaks structure. It's the last deepest down candle, right? Before price breaks structure that you would have to mark. So let's just say, for example, right, price came right back to this level. All right, let's say it came right back to an order block right here. This was the last down candle before price broke structure. When price revisits this level, we're looking for a bullish candlestick pattern to close above our area of value. All right, we're looking for a bullish candlestick pattern to close above our area of value for us to take action, for our SL to be beneath our area of value, for us to go take out a previous high. All right. Does that make sense? All right. Now, again, price comes to this level, it takes off, creating a new high. When price retests, it's going to fall within one of these three levels. Now, in this case, let's just say price came back to a fair value gap level, right? Let's say it came back to a fair value gap level. I'm going to explain what a fair value gap level is when we get to the charts for real, right? And we're actually looking at it. Why? Because there's a certain thing that I have to point out to you for you to identify and know what a fair value gap is. All right. But when price gets back to that fair value gap level, just as it did with the order block, all we need to see is price close above it. Once price closes above it, we take our entry, SL's below our fair value gap, and we're aiming towards the highs. All right. They're aiming towards the highs. If that's made sense thus far, right? If that has made sense thus far, right? It is being recorded. If that's made sense thus far, right? Type a PO3 in the chat. All right. That's the uptrend. So at no point should we be selling in an uptrend, right? At no point, at absolute no point should we be selling in an uptrend. Okay. So you got your uptrend. Now the downtrend is very similar, right? Now it's creating lower lows and lower highs, lower lows and lower highs, lower lows and lower highs, right? And lower lows. Now, again, what we want to see and how you're able to identify and know that a trade is moving to the downside is you simply want, right? You simply want to see price take out a structural level here, right? Once price surpasses this level, right, we're then able to identify price creating a new lower low for it then to pull back to an area of value on the backside of the trade. All right. So let's just say it came to a fair value gap. Price came back to that level. All we need to see is a candlestick close beneath it. All right. That's all we need to see. We take our entry after that candle closes. We place our SL above our area of value, and then we're falling to the downside. All right. So on and so forth. Right. Let's say in this case, price came back to this level. We know that this was a lower low and it was also a structural point. So when price came back to this level, for example, it came right back to a what? A structural level. So all we need to see at this particular point is a candlestick closing beneath this structural level. All right. Once you get that, you take the trade back down towards the low with your SLs above the high, because if structure happens to break above an area of value, it was actually meant to. Okay. Everything that happens in the market is supposed to happen, right? It's not to attack you, it's to do what it's supposed to do. Okay. All right. Everybody got that. All right. Everybody good. Great. So I explained the uptrend, I explained the downtrend, right? And then you have a what? A sideways moving market. This is a market that we call a ranging market. Some people even like to call it consolidation, right? When you get markets like these where they're moving side to side and there's no true trend, it's no true direction or where it wants to go, it's basically just building itself up to take off in a certain direction. More times than not, whatever it does before the consolidation, it will tend to do it after. All right, I'm gonna say that again. More times than not, that does not mean every time. More times than not, whatever price does before it consolidates it's more times than not going to do it after. Okay. So you just want to play this consolidation ranging market very close because you don't want to get stuck inside of a ranging market, right? It might drive you crazy. Okay. It might just drive you crazy. So that's the examples there. You have, like I said, your order block, right? You have your structural level, and then you have your fair value gap. All right. Now let's go look at patterns that starts uptrends and that starts downtrends. All right. The patterns that start an uptrend is a double bottom, right? Start another pattern that starts a uptrend is a triple bottom. right? Right? Another pattern that starts an uptrend is called a inverted head and shoulders, right? These three patterns starts uptrends. Okay. Then you have three patterns that start a downtrend. All right, which is a double top, right? Excuse me. Then you have your triple top, right? Oh, sorry about that. Didn't want to act right. Right. Then you have your what? Your head and shoulders pattern. So it'll be something like this, right? Headed to the downside. Can anybody tell me what is the thing that you are noticing about this market, right? What are you noticing? And it's a reason why I call it the power of three. What are you noticing? Can anybody tell me what you notice, right? Based off of what I just explained to you guys that the market is actually doing, right? Can you explain to me what the market actually is doing? I want to see if somebody is going to give me this correct answer. I may have something special for you. I may have something special for you. Right? They're retesting back to the areas of value, right? You said support areas, right? But let's say they're retesting back to areas of value, and they're always going to retest back to areas of value, right? And for everybody that said that there's three of everything in the market, right? There's three of every single thing in the market. There's three trends. There's three areas of value. There's three types of shapes, shapes that are created in the market. There are three types of um, patterns that are created in the market: bullish and bearish. Right. All right. That's great. I'm glad you guys answered that correctly. Right. That shows that you guys have been truly paying attention and you truly are taking hold to everything. Right. And again, good job, Schwartz. There's three types of candlesticks as well. There's bullish, there's bearish, and then there's indecision candles. Bullish candles, bearish candles, and indecision candles. Okay? All right. And there's a median between all of that, right? Because then you also even have shapes that also, come about in the market, right? You have shapes, you have a ranging zone here, right? You got your ranging zone. Then you also have a what? You have a what we like to call a descending triangle. And then you also have let's see, you also have a ascending triangle, right? Descending, ascending, consolidation zone, right? And then you also have your symmetrical triangle, right? Symmetrical triangle. That means price can go either way outside of this symmetrical triangle, right? Sideways, it can go either or because it's indecision of where it wants to go. You have to wait till the break of structure commence, which means once it breaks outside of the triangle, that's letting you know the direction it wants to go for that time being. Then you have your descending triangle, right? An ascending triangle. Once your descending triangle is being created, that's just basically letting you know that price wants to transition and go to the upside. And vice versa for this one. Once price start working its way in here, it reaches a level of resistance for price to fall to the downside. All right. So sideways, indecision, it can go either way. This is setting up for it to go up. This is setting it up for go down. And this is setting it up to go either way, whether it's up or down. All right. Trouble placing areas of value within the candles. I mean, how to determine the places of order blocks. But all right, I'll go over that. All right, don't worry about that. I'll go over it. So, boom. Everybody got this, right? Is everything that I've just explained thus far, is it making sense to everybody, right? We might have new people on the call, right? If there's not new people on the call, then right, we want to see, right? If you feel like you're stuck, if it's not making sense for you, type a one in the chat. But if everything is making sense, type a PL3. If it's making sense, type a PL3 in the chart, all right? In the chat, I'm sorry. It's making sense for you. All right, everybody good. So let's see. Good. All right. Now let's go look at these charts in real time, right? In real time, we're going to go basically over everything that I just went over with you right now, right? And we're going to look at it on NZD I'm going to be completely honest, guys. I don't normally trade NZD pairs that start with NZD. I sort of try to stay away from, right? But because I'm very confident in my method and I'm true to my method and in the way that I teach it and the way that I trade it. So it's no big deal for me, right? To trade anything. But I like to say I do like staying consistent for the most part. All right. But if something is setting itself up to show me something that I feel like is very much so beneficial for a trade that we can get in, I'm definitely going to call it. Right. And I'm definitely going to make sure that you guys, right, understand why I'm calling it and you understand the entire method in itself. So, based off of what we just went over, can anybody decipher what type of trend this is right here? All right. 1 second. All right. What type of trend do we have here? Let's see. Let's see who gets this right, right? Let's see who gets this right. We in a downtrend. So we should not be doing anything but selling. We are not doing anything but selling. Gary, how am I able to decipher that this is now a downtrend? Right? How am I able to figure that out if I don't if I don't have an indicator or whatever the case may be, right? How am I able to decipher which way this trade is going to go, right? Right? I'm on the 4-hour time frame. But this same method, everything that I'm teaching you, you can do it on a lower time frame. You just have to pay attention to the overall trend and a trend that's on that particular time frame that you're trading on, right? Nothing changes. Everything is the same. The only thing that's different is a time frame, which means if you go to a lower time frame, that might mean your SL may be tighter than mine because I'm on a higher time frame. If I go to the 15 minute, the 3 minute, I mean the 5 minute, the 30 minute, the 15 minute, my SL may range at max maybe 30 pips at max, maybe even less than that, right? 25 pips. If I go to the 30 minute to the hour, my SLs might be 30 pips, 35 pips, to be honest, right? That's when you go to the 4 hour, your SL may jump to like 50, 40, depending on where you are and how you're taking the trade, right? So your SL is based off the time frame that you're on. I want you everybody to understand that, right? And the method is always going to set you up to have a great risk reward ratio, always, right? So, how am I able to decipher if the trade is going to transition from going into and from being an uptrend to then now transition to be a downtrend, right? What do we notice? This was the last higher low, right? So the moment that actually price took out this higher low was the moment that price was letting you know that price is looking to transition. All right. It gives you your break of structure. Price creates this new low, right? Where does price retest back into? Right? We want to find the most discounted area that price can retest to. When I say discounted area, we want to find the deepest, right? The deepest, most valuable area of value. Now, if you're looking for an order block, right? Could price retest to an order block? For sure. What order block could it most definitely come back to? You want to find the order blocks that are near fair value gap zones, right? That are near fair value gaps. So before we even go into the order blocks, can anybody tell me what this level is right here? If you've been on my sessions with me, you should know what this level is in the market right here. You should know what it is. If you know what it is, type it up right now. There we go. Fair value gap. That's all it is. It's a fair value gap zone. How are we able to identify that? From this candle's wick to this candle's wicks, right? These candles wicks don't meet in between the body of this candle, right? These wicks don't meet in between the body of this candle, which gives us, right, our fair value gap zone from wick to wick. We drag it across. What do we get? Our fair value gap zone, right? So what do we have to see once we get out of that fair value gap zone? We just need to see a bearish candlestick close beneath it. That's all we need to see, right? We take our entry here. SLs will be above this point, about 30, about 30, about 30 pips, right? About a 30 pip SL for a 30 pip gain at minimum, right? You at minimum want to go for a 1-to-1, right? You see how that works? Price goes and takes out your take profit, right? Meaning that it took out a lower low, right? Our lower low that it took out, giving us our breaker structure, right? When price decided to create this lower low and retest, where did it come back to? Can anybody tell me, right? There's two levels that price that it came back to. It's two levels. Can you guys name the two, right? Because this is what I mean when order blocks can be significant, right? And how you know what order block is going to get touched more than the other one. All right. You notice how this, all right, I want to see what you guys answer. I want to see what you guys answer. It came right back to it. It came right back to an order block, but it also came back to a fair value gap. That's right beneath it, right? Right? This order block, it grazed the tip of this order block, right? Why? Because this is the last up candle before price broke structure, right? And not only that, there's a fair value gap right below this order block. All right, everybody see that? So order block here, right? And fair value gap is right beneath it. This candle's wick doesn't touch this candle's wick in between this body, right? So from here to here, that gives us our what? Oh, sorry. That gives us our what? Our fair value gap zone, right? If you wanted to enter off of this candle closing beneath it, you most definitely could, right? You take your entry, SLs are above your what? Your areas of value, and I'm looking to go take out my what? My lower low, or aim for a 1-to-1 risk to reward ratio, which is 35 pips. If you got a 35 pip SL, you need a 35 pip gain. That gives you your 1-to-1. If you want to go for a 1-to-2, 1-to-2, what's 35 plus 35? 70. So if I want to go for a 70 pip take profit, I most definitely could. Is it going to take time? Yes. Is there a possibility that the trade can turn on me? Indeed, right? There's most definitely a trade that can do that, right? But ultimately, what ends up happening? The trade worked in your favor, right? Do you have to go for the whole juggler at one time? No, you don't have to. You could have took your profit once you seen this trade get this far, right? Because you do know that it took out the lower low, right? Right. So, right, when price took out this lower low, boom, boom, right? It creates the lower low. Price then retests. What does it retest back to? Right back to this order block, right? That got grazed. It barely got touched. So price came right back into it and gave us our candle that we needed to see to close beneath our order block, right? And have a decent SL, right? 25 pip SL. Let's say we want to go for a 100 pip gain or even a 75 pip gain, right? Because 25 plus 25 plus 25 is what? 75, which gives you a 1-to-3 risk to reward ratio, right? 1-to-3. And you see how price transitions, goes into profit, goes into drawdown a little bit, and then changes directions and goes in your favor. All right. Is it going to work every single time? No, it's not going to give you 100% risk reward, 100% win rate. That's not what it's for, right? because sometimes price can run past an order block and go deeper within price, right? Because if price wanted to break this order block, it most definitely could and come touch this one, right? Because this is a deeper order block before price actually broke structure. Okay, everybody understand that? Has that is that making sense thus far? All right, I see you, man. See you. See you. See you. All right. So everybody got that. If that's made sense, little. Okay, little. All right. Lower high, lower low, lower high, lower low, lower high, lower low. We want to find our deeper areas of value after price breaks structure. Once it breaks structure, we find our deepest, most discounted order block or fair value gap in or structure level in order to take the trade in a certain direction. I'm back, guys. Sorry about that. All right. So let's see. All right. We went over that downtrend, right? Now let's go take a look and see if we can find an uptrend, right? An uptrending market, right? Can anybody tell first before we even do that? Can anybody tell me what this market is right here? All right. What market is this right here? Let's see if we can identify what type of market this is. Sideways moving market, right? Consolidation, right? After consolidation is created, right? Now, this is just proof that yes, price moved in the downside. It started to consolidate, right? Most people thought it would have probably continued to go to the downside, but what did price end up doing? It surpassed. It surpassed the structural level in this consolidation range and took off in another direction, right? For an uptrend. Okay, so let's go find a decent example for an uptrend. Okay, all right, we can go with this one right here. Let's go with this one here. Better yet, take that back. All right, this one is cool. This one is cool right here. All right, now, right, you guys should already know what this is. I already said it, but if you guys want to look at it, right, we already know that this is a what, right? It's an uptrend. So if you say that this is an uptrend, you are correct, right? Because it's making consistent what? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, right? And how are you able to identify that a trade is going to go in an uptrend? It's going to break a previous lower high, right? Right here. Price surpassed that level, right? Price closed above it. And then what did price do? Price decided to retest. Now, once price retest, what level did it retest to? Because anybody tell me, right? Can anybody tell me what level it retested to? Let's see if somebody gets this right. I ain't gonna say it. I want to see if somebody gets this right. All right, other says fair value gap. Anybody else? Anybody else? Let's see. Fair value gap. Jaylene said fair value gap. All right, anybody else? There we go. Everybody got it right. Everybody said fair value gap, and it definitely did touch the fair value gap. This candle's wick did not touch this candle's wick. So from those two wicks, if we pay attention, what ended up happening to price? It touched, literally tapped this fair value gap, and did what? Change directions, right? So you get your rejection, right? You possibly could have got your entry on a smaller time frame, right? Maybe like the 1 hour or the 30 minute, right? But because you, right, I'm trading on the 4 hour time frame, my entry probably would have been after this candle closed, right? And then I would have simply been aiming towards these highs on the back end, right? Because there's no true direction of where I, well, not true direction. There's no indication of where I can aim to, but to the backside to give me some sense of direction of where it could stop or where it could go. Okay? So from boom boom, that gives you what? You could have placed your SL beneath the bodies of this candle, because if price does transition and continue to go lower after that point, it probably would have continued to fall. All right. So you would have got your entry here. You would have dealt with a little bit of drawdown, and then price went into your direction and hit your take profit. All right. I don't want you guys to get, I don't want you guys to get like thinking that every trade is going to win. That's not the case, right? What I'm trying to get you guys to understand is putting yourselves in a position to win more than you lose in a zero sum game, because this is what trading is. It's a zero sum game at the end of the day, right? But you got to find yourself, you got to find something, right? Simple enough to where you're able to follow the trend of the market and take the trades at these discounted levels, all right? So, what do you end up getting? You got your new high that was created, right? Price surpassed this level, giving you your what? Your break of structure. Price creates a new high when it decides to retest. Can anybody tell me where price retest to? What level is this? Can anybody tell me? All right, somebody said money zone. Somebody said fair value gap. Oh, it came right back to a order block, right? It came right back to an order block. The last down candle before price actually broke structure, right? Doji candlesticks are also order blocks, all right? So anybody that tell you doji candlesticks are irrelevant, they lied to you, all right? They lied to you, because doji candlesticks can also play a factor in being order blocks, right? And you have to cover from wick to wick, all right? From wick to wick, that could be an order block. What happens to price when it comes back here, right? It gives you a bullish candle that closes above, right? From here to here, we want to place our SL beneath our order block, 30 pip SL for a what gain, right? We can go for a 60 pip gain, right? 30 plus 30 is 60, which gives us our 1 to 2 risk to reward ratio, right? And we look and see how price always gives us room to breathe if the trade happens to go into drawdown, but then it plays and goes out in its favor towards the higher high. All right. Is everybody following along? Does that make sense thus far? All right. Good. So now, higher high been broken. Higher high has been broken, right? Price creates that new high. What does price retest back to? It's going to come back to the deepest order block that price can find in or a fair value gap that has not been touched. All right. And or a structural level. Okay. I want you guys to understand that. It could also come back to a structural level. Wicks within candlesticks are also structural points. All right. This is a structural point. This is a structural point. This is a structural point. This above here is a structural point. Right? Anywhere you see wicks plays as structure as well. Okay. So price created that new higher high. When it retest, not only did it come back to a order block level, but what's next to this order block level? What other zone, what other area of value is near this order block? Can anybody tell me? Because there's two in one spot. There's two in one spot. You got this order block, and then there's one right above it. Can anybody tell me what's that one right above it? Right above it. A fair value gap. Right. So this makes this order block significant. Is it beneath the previous higher high? No, it's not. But because it's a fair value gap laying right above this order block, right? It makes this order block significant. And same as any other order block. If there's a fair value gap um above it or beneath it, depending on which trend you're in, right? That plays as a factor in showing you, right, how these fair value gaps can come into play. All right. Boom, boom. What happens? Price is rejecting both of these levels, right? If I wanted to enter this market right here after this candle closed, I most definitely could, right? Where would I place my SL? I enter the market here, right? My SL would be beneath both of my order blocks, which would probably give me like a 50 pip SL, which means I need to go for a what? A 50 pip gain. And if we drag this across, we see that what? It was choppy, but price end up hitting our take profit, right? It was choppy, but price took out our take profit. It gave us our chance for our trade to breathe, but it also gave us a setup for us to take out our next higher high that was created, right? Everybody good. Is everybody following along with that? Does that make sense? Everybody got it? All right. All right. So, all right. If you got it, type PO3 in the chat. Let me go back and let's take a look at some of the trades that we actually took this past week. Guys, again, I appreciate you guys for getting on the session today. All right, I appreciate you guys for getting on. This will be the end of the call. I will be right. If you guys want to follow me on my YouTube channel, that will be at the Solid Pip Assassin. That is my YouTube channel, the Solid Pip Assassin. I record videos, I post videos on there for you guys that aren't able to get on to watch it again, and even for those that are on, right? So you can continuously watch my videos, so that way you can pick up on the method quickly. Okay. Um, that'll be the end of the session for today, guys. I appreciate you guys for getting on. Right. With that being said, I'll see you guys on next session on Wednesday. With that being said, peace out, you guys.